All right, good afternoon, traders. Thanks for joining today's guest speaker webinar. As always, my name is Keith here with Shark Indicators. We've been in the NinjaTrader ecosystem since 2011, providing tools like Bloodhound and Blackbird that help traders be more productive and in control of their own trade systems. We're always looking for ways to add to the trader's toolkit, and Shark Week is a big part of that mission. Before I pass it off, let's take a quick look at the risk disclosure. Futures, foreign currencies, and options trading contain substantial risk and is not for every investor. And of course, past performance is not necessarily indicative of future results, so be smart about it. Ferenc brings his decade-long banking software experience to Remek. He started building his own algorithmic trading strategies in 2005 and has been a Shark Indicators partner since 2011. Over the years, he has developed his unique hands-on experience in evidence-based, technically motivated directional trading with a sharp focus on crowd behavioral patterns. So with that, Ferenc, feel free to share your screen and we can get started.
Thank you very much, Keith. Hopefully, we're going to have a fun webinar here, casual and effective. Okay, so what are we doing today? As some of you may have seen the email yesterday, what I promised is that we're going to build a system with an edge, with a verifiable edge, in 60 minutes or less, perhaps much less. We'll see how it goes. So without any further delay, let's jump in because I want to keep my promise. Okay, so first of all, please consider the motto that I've been using to highlight what the job is here for all of us. And that is that the only way to become inevitably profitable on the markets by trading is by trading a properly capitalized account with an edge. Now, if you think about it, we might go into the details later. Also, let me just say right up front that it's just impossible to have time to squeeze everything in that I ever wanted to say in 30, 40 minutes. So feel free to visit our website for more materials later. I'll have a little resources page here for you soon. But if you think about this motto, actually, there's nothing new here. This is all math. Because imagine this on our website, 30 seconds or less. On our website, there's an example with John and Paul. And me as a Beatles fan, of course, is John and Paul. It could be Charlie and Jack, doesn't matter. Today, let me give you another example, hopefully just to visualize the motto. And that just imagine an ATM and the bank card. And let's say you can go to that bank card, to the ATM twice a day. Doesn't matter, twice a day, let's say. And here's the rule. Every time you put in the bank card, it's exactly 50-50, randomly 50-50 if it will take $100 from you or will give you $120. Would you like to have that card? That's the simple question. If you say yes, type yes. If no, say no. Think about it. It's not a difficult question, of course. I agree with Seth. Basically, it would solve a lot of our problems in life because that card, I would want to use it every day and just use it to the max because that's what an edge is called. Even if the results and the outcomes are random, even if it's 50-50, which is what we call in trading the accuracy, the win-loss ratio is 1.2. That's all we need. Okay, so that's the simple math behind the edge. And please remember the little difference, but important difference in grammar. It's not a verified edge because we can never prove anything because the future hasn't happened yet. It's a verifiable edge, and that's a big difference. Okay, so let's move on and let's get down to it. A couple of little details here. I'm not going to read it all, but the job is obvious. We're going to build a system. We're going to use an indicator, one proprietary Remek indicator, which we need to build a system that will give us the juice, the trigger rather, which we will put into Bloodhound and we'll proceed from there. The non-Bloodhound version is available in the store, but this presentation is for Bloodhound fans, and I hope to be able to show you that it makes a lot of sense to use this fantastic tool and also Blackbird to manage the trade. For later, if you want to, oh, by the way, this is a Google slide show and with links, so later this will be online and you can click on these links. These are just resources that you can explore later for the evidence-driven trader. Here's what we'll need. First, we'll need a indicator, and we will give that here. This is called Remek Momentum Pro. Those of you who are familiar with our work, you already know that this is the foundation of the strategies as well. But right now, we're going to use the indicator version because that's what we need. And then we'll use, of course, Bloodhound to build the signal. And I assume that you are somewhat familiar with Bloodhound. This session will not focus on how to use Bloodhound. There's excellent resources by Shark Indicators about that already. And we'll just put it to good use, okay? And then we'll use Blackbird, another Shark Indicators tools, as I'm sure one that needs no introduction, to manage the trade. And we're going to do the whole thing on NT8, NinjaTrader 8, of course, and verify our edge. Well, we're going to explore or identify the verifiable edge. That's what I should have said here. We're going to do that in the strategy analyzer in NinjaTrader. So that's what we're going to do. Let's go. Now, what's the job? Right. So what is needed for the job? Now, what's the job? And what's the job is an important question because, I mean, in any tool, Bloodhound tool, we can build anything. With Lego too, you can build something useful and you can build something totally useless. Of course, what we want is to build something useful. So we are strong believers, and this is what we've been doing for 15 years, research crowd behavior. The financial markets, liquid financial markets, if there's two guys buying, selling potato, that's not a crowd. And crowd behavior will never emerge. But on liquid financial markets, the ones we are trading, there's a lot of crowd there. So crowd behavior, human psychology, will emerge without even the participants being aware of that. They just participate in the events to their best interests, and that will make patterns emerge. And that's the point. There's two main ways to trade, basically, if we really simplify this, either with momentum or mean reversion, which means going back to some kind of average price, however you define that area or price level. And we choose to trade momentum. So today we're going to build something that trades momentum. And that momentum, if you look at this little chart, is the white line. The white line is what we want to grab from the market, or at least most of it or part of it. And imagine, just consider when we go to a restaurant, we're not going to buy, we don't go to the restaurant to buy the restaurant. We just go to the restaurant to have dinner, to have a bite. Same thing on the market. We are content with grabbing a little part of this move here, and perhaps we'll do it again if the trend, if the momentum reemerges. We don't mind doing it again, but we're not trying to overstay our welcome, as it were, in the markets. All right, now why? Well, I'm going to click on that, but later you can click on the backtesting results. This will lead to our YouTube channel. There's lots of videos and information about how to backtest and what the results might be. And if you still want more, then of course the documentation to our methodology is available on our website. All right, one more thing we need to know before we go any further. When we talk about pullbacks, what we call consolidation areas, because they don't necessarily are sloping, and there's another couple of technical nuances, but I'll leave that for another time. But what I want to emphasize here, and probably what you know already, is that there are two kinds of pullbacks, simple and complex. And every trader knows this, whether you call it that way or not, you know this, because you go along, let's say, on a pullback and you get stopped out. And then 5 minutes later, 30 minutes later, 2 days later, whatever the time frame, the momentum reemerges again and price goes where it was going to go anyway. And then the question is, are we going to be in that second move, or perhaps we're still complaining about the past and being paralyzed about getting stopped out or having been stopped out with one zigzag before? What we need to remember here, one zigzag is called a simple pullback, and sometimes it's a natural process by the market for a simple pullback to transition into a complex pullback. As traders, we need to have predefined plans for these situations so that we don't improvise and we don't let our emotions drive the bus. This is natural market behavior. We should have an answer. And luckily, our software does have an answer. And what we're going to build today does have an answer. So just remember this simple complex, that's all. Okay, now one more page here. Again, I'm not going into the details, but there is one blog post which has been popular among our readers or fans, let's say, or customers. And if you click on this later, it will take to this blog post. Maybe it was 2 years ago, The Anatomy of a 1-Hour Trade. I'm not going to go into all the details, but if you look at this, if you read this page, and if you read the blog post, then it will tell you basically everything you ever wanted to know about how we trade. And that is important for us today because this is what we're going to build here. So we've come to the point here where we just have to go to NT8 and do the job. But before we do that, I also want to here we go, a couple of pages here off YouTube, and maybe you've seen this before. This is from UCLA, and they start these what are these metronomes randomly. And what I'm showing here to you is the spontaneous emergence of crowd behavior, of course, in an inanimate world. These are not living things, but as you watch these, quite interesting that these metronomes will be synchronized totally, and this process can be mathematically described and actually is being studied by experts. Okay, so it is a fascinating thing, and it happens as long as you have 2 metronomes on your piano, you can test this out as well. Okay, there's another one, a famous, we're moving into human territory. And again, I won't spend more than 30 seconds on this part of the presentation because we want to get into Bloodhound. But remember this about, maybe was it 10 years ago, 15 years ago? This is a bridge in London, a very famous incident. They opened up the bridge and the crowd, the happy crowd, I think it was the first day, maybe, I don't know, they started to cross the bridge, a lot of people. And what started to happen is certain crowd behavior started to emerge, which actually created a very dangerous situation. They had to close down the bridge before it broke. And the participants, and that's probably the amazing thing, is that the participants couldn't really do anything about it. They had no choice but to do what the crowd does, because the bridge was moving sideways and they started to move like a tennis player, shifting one leg to the other, and everybody started to do the same thing. That created a situation which really tested the bridge. Crowd behavior emerging spontaneously. Another famous movie here, or a video clip from a classical concert, happens to be in Budapest, but probably there's many other events or examples like this also. But this is being studied in academic circles, crowd behavior. And what happens here is that the concert is finished and people start clapping, of course, randomly. And around 50 seconds into the video, I'm not going to play the sound, but you can find this easily on YouTube. Crowd behavior emerges. If you start looking at individual people, they will start clapping their hands at the same time in unison. And 99% of the people join in. Very few don't. That is crowd behavior in the living world. Okay, now talking about animals, here is one blog post here two years ago or something, or a year ago. This is animal behavior here, world. And if you notice, just a moment ago, it was obvious that not all the sheep are actually moving in the same direction at the same time, but eventually all of them will join. Quite fascinating. And what's this last one? Oh, the last one, yes, I wanted to just mention Professor Andrew Lowe, whose work has had an impact on me and our work as well, because he is at MIT and he's the one who studies these things academically, and I highly recommend checking out also his book and his material on YouTube. So this is the theoretical foundation of our work. And let me just go to NinjaTrader now. So I'm going to open up a chart and we're going to start building the Bloodhound file. But I wanted to definitely mention these examples to you so you know that you know why we are doing this. We're not just going to pick randomly and build something and hopefully it will make money. The chances of that are rather slim, if not nil, and we have a much better idea. Study the behavior of the crowd because the financial markets, especially liquid US markets, futures markets, indexes, totally liquid, highly liquid instruments, and they are ideal to be analyzed from a crowd behavior point of view. All right. I think that will do as an introduction. Now you know why we are doing what we're doing. And let me just start the work here on this, let's say, NQ 15-minute chart with a look back of 180 days, just to keep the chart reasonably fast so we don't have to wait too much if we do anything and if Ninja wants to update the chart. Okay, in the meantime, also, let's stop for a second and ask you if you have any questions before we start building. What indicators are we going to use? Perfect question. We're going to use our proprietary indicator, Remek Momentum Pro, which I will show you exactly later, and you can also purchase this today or anytime later. It is a indicator that already captures what we're looking for in crowd behavior. So we don't have to start from scratch. We're not going to spend 15 years today in half an hour. It's been already built. What I'm going to show you now is how to use this indicator and this concept to put it into Bloodhound and work with this concept or implement this concept easily in Bloodhound and Blackbird. So the indicator is called Remek Momentum Pro. And since it's a pretty smart indicator, that's the only indicator we will need. All right, so let's do this. This is going to be fun. So this is just price. You see, there's nothing on the chart, just price. And this is where we're starting from. And if you just look at price, well, it's rather difficult to, so when should I buy? When should I sell? What should I do? It's difficult to say because there's no real crutches here to guide us. And I'm just going to show you a couple of templates here that we can use. So first of all, first thing we can do, very simple, just put on the day boundaries or session boundaries. That is already a little help. At least we know when the session started, when the session ended. That's already a good thing to do. But again, it's still not good enough to make any financial decisions or trading decisions, of course. Let's see if we can make it even easier. So that was, which one was this, number one? Yes. Okay, so let's load number two. Now we have the Keltner. And we do work with the Keltner channel. That's been known fact for many, many, many years now. We think it's quite useful, actually superbly useful. And that's what we are using for our work because it does the job. So the blue line is the Keltner, and the only thing is that the midline, some people use the SMA 20. This one happens to be the EMA 20, but basically it's just a average price. It's the line where price would be average if it were there. But as you see, sometimes price moves away from the average, and we're going to call these areas somewhat emotional. There must be something happen which drove people away from the average. Okay, and these areas, especially when price is outside the Keltner, will be important for us. So the width of the Keltner channel, the way we use it is 5 ATRs. 5 ATRs, that's all. 5 ATRs, always 5 ATRs. And of course, objectively or physically, it's not the same width all the time, but it is always 5 ATRs. And 1 ATR is changing. Therefore, the width of the Keltner is changing. Everybody knows this. I'm not saying anything new. It follows that from the half line to the edge of the Keltner is, or must be, 2.5 ATRs, and it is always 2.5 ATRs. So we know this distance. All right? We know this distance. Now, something will follow, and maybe I'm running ahead a little bit, but let me just say this important information. When we consider a trade based on this principle of price being in the middle, in which case we're not really interested, and price being emotional outside the Keltner, and then we start to get interested, there is a question. If I do enter the trade, where do I want to put my stop? One of the major reasons, I don't have official measurements, I never studied this or never tested it, but from hearsay, one major reason for traders not really being successful is thinking that they can trade with very tight stops. And of course, the professionals know this, and what they do, they just run them over. They have sometimes computerized strategies that exactly target those clusters of stops that the naive traders put wherever they put them, and professionals know where those stops are. So where do you put your stop? Well, again, you can try your luck and try with very tight stops, but the way we think, let me just use, okay, the NQ hasn't been too easy, kind of sideways lately, so I need to find some, okay, this is a trending area. All right, so let's suppose that we considering a short trade here, or maybe a short trade here, or something like that, some kind of consolidation area to go short. Where would you put your stop? The way we think is we use the Keltner to answer that question, and we want to put the stop on the other side of the Keltner. We're going to use that in Blackbird today, a little later today, okay? So this is where we want to put it. And thinking that if price goes back there, we don't want to be in that trade anyway. But often price will test these areas because there are always little clusters sitting here hoping to get lucky. They usually don't. So we don't want to be there. And the question is, okay, if we put the stop here, then we are going to, and let's say the entry is somewhere in the middle or maybe a little bit below the middle, right? By the time the candle closes, we're a little bit below. So we need to measure this area, this distance. And we know this distance in ATRs, maybe 2.5 plus a little, maybe 3 ATRs, okay? But the question is, how much is this in dollars? Because we don't open the trading account in ATRs, we open the trading account in dollars. And so we need to know how much we can risk. One job, we're going to get to it later, is the crucial task of converting this ATR distance into dollars, because that will tell us if we can afford the trade. It's either a yes or a no, and if it's a no, I'm not allowed to make that trade. So actually our software can automate that, and that way our software almost makes it impossible for a trading account to get blown because it will not allow you to do the trade. More about that later. Now, so these are the basic concepts that we're going to utilize. And let me get back to the end of the chart here, and might as well clean it up because we want to start building. So just some of the circumstances or some of the factors that we need to consider here. Let me see, what's the next step? Then what I can do, this will not be in the code, please. This is just visual, but it's been my habit for many, many years to put this indicator, which comes from Ninja, the prior day OHLC, on the chart because it visually helps me to know where I am. So this is basically yesterday's the prior day's low, prior day's high, and it's very simple, and the prior day's close. And then I want to show you this little indicator here, which we call Remek converter, available in our shop, and that will be the indicator that will answer the question for us, how big in dollar terms is, let's say, 2.5 ATRs. It's a quite handy indicator because it can actually, I could even set it to 3 instead of 2.5, then it would give me the number for 3 ATRs, you see? So if I enter the trade a little bit above the Keltner, let's say in this situation, let's say I enter somewhere here, well, maybe not the best example, but somewhere a little bit above the midline, and I put my stop around the lower Keltner somewhere. So this could be around between 2.5, 3. It could change a little bit, but by and large, 3 would always cover us. So if I ask you the question, if I ask most traders the question, how many dollars is 3 ATRs on a 15-minute NQ, they would have no way of answering that question. And you can put this on a 2-minute chart, on any kind of chart, any market, Remek converter will always give you the figure, how much is 3 ATR. So instantly know, can I afford to risk this money to find out if I'm right about this trade? So it helps big time and does the math in a millisecond. This is something we can put to good use in the algorithm. Maybe not today, it's a little bit more advanced, and it's part of Blackbird stuff anyway, so trade management, but we'll get to some details later. All right, so I think we have the chart ready. That's all we need. I don't think we need anything else. Right. Number 6, actually, I forgot about this, but let's handle it right now. Number 6, you can see the blue arrows and sometimes the red arrows on the chart. They are the triggers. They are the triggers that our Remek Momentum Pro indicator yields or gives us. And there's some sophisticated mathematical calculations behind this. So, well, let me say, if every time you look at a blue arrow or a red arrow, you're looking at 15 years of research. This is what we put into this, and it correctly identifies the emergence of momentum. Now, the software cannot make a mistake. So when this arrow does show up, that's the trigger. Momentum has emerged. But please note, that doesn't mean that we're never going to have a losing trade. Momentum can fail or disappear after we enter the trade. So of course, we're going to have losing trades. But the way we see it, this is our best chance. This is our ATM card that I mentioned when we started that will give us that little advantage that will make it, this whole exercise, this whole business, worthwhile. We're ready to start. We have everything on the chart that we need, which is not much, and just very Zen style simplicity. And we have the triggers. And now I'm going to put Shark Indicators Bloodhound on the chart, and we're going to build a system with Shark Indicators Bloodhound. Check this out. And I already have kind of built it, but I'll show you the process. I already named it 1.0 just to start with something. And probably what the first thing I'm going to do, so this is just Bloodhound, okay? So you know how this goes. With Bloodhound, we design the signal. And then once we have the signal, we're going to put it into Blackbird because that will put on and manage the trade for us. The first step I wanted to show you is actually when the inputs are not yet connected to the result. Here we go. Okay, so here we are. We have Bloodhound ready to go, and we have the indicator. And what we want to recreate the same signals with Bloodhound that we have on the chart now. Okay, we have okay, I'll cut to the chase here. Our indicator is smart, first of all. Second, it's been from the start, it's been built with Bloodhound users in mind. So what does that mean? That means that our indicator has a output to Bloodhound. When you look at this here, again, I'm not going to go into all the details. Zach and Jeremy and Keith can do this much better. Shark Indicator has excellent workshops, by the way, which you're encouraged to attend. But let me just show you this. These are the many output here, if I scroll down here, that are yes, no, true or false results from the software that you can use as inputs in Bloodhound. Now, I'm not going to show you all the 20 or 30 of them. I'll just show you the one that we'll use right now. And one of them is simple long signal, simple short signal. Remember, we have two types of pullback signals, simple and complex. So we have built both, and we're going to use both. So this is simple long, simple short, long for long, short for short, kind of makes sense. And here we go. And all I need to do as a first step, let me just connect this to the simple pullback connected to the result window and go to the chart. And what you'll see is that some of these blue arrows are marked up by Shark Indicators racing stripes. You see, but not all of them. And the reason is because these are only the simple pullbacks. The complex pullbacks are also marked up on the chart. By the way, you know what? I could get really fancy here because I can give the complex signals a different color. complex, simple, simple. So why don't I give this, let's say green, okay? Green is good for long. So green will be a complex dark green, so we can see it, and maybe a, I don't know what kind of a tomato for the short, whatever. I just want to show you that some of these signals will be green. Okay, actually, these are now the simple ones, and the complex do not show yet because we haven't programmed it yet with Bloodhound. Now, as soon as I do the other one, the complex pullback, then we'll have both. So this is the simple, all right? Complex, same game. I'm just going to show you quickly that the output is pre-built for you. So if you buy this indicator, you're saving, I don't know, a year of work because you don't have to program this. The output is here. And if you did this job correctly, a year later, you would end up with the same triggers because it's a mathematical capture of the reemergence of momentum. And if you dig into this deep, you'll find the same thing that we found. And if you study Andrew Lo, you'll end up where we are today. But we're saving you a little time. So here we go. Check this out. I scroll down here, and hopefully it is here. It should be here. Here it is. Complex long signal. I just pre-selected it to save some time today, but it is all here. Complex long, complex short, easy. And if I connect it to the results, then like magic, I'm going to see the blue arrows. So let me just show this to you again. So right now, the blue arrows are built in Bloodhound. And then now the green arrows are built in Bloodhound. And as everybody knows, in Bloodhound, we have an OR node, which if you use it, it will connect both either this or that to the result node. And look at the chart. I'm going to make it full screen. Magic. We have all the signals ready. Okay. Now we're going to talk about, of course, results and stuff. Again, NQ has been kind of sideways lately, several days, not yesterday, but several days, but we had some good trending action here as well. So went up and down both, you see? Okay. Also, you don't have to do this on a 15-minute chart. I chose a minute chart because Ninja tends to be faster a minute, much faster than tick charts. And otherwise, you can use this on any bar type, any time frame you want. The way I say this sometimes is that we give you the hammer, you have to find the nail in your house. So what time frame, what market, that's individual. All right, this is a hammer. Look, we have the signal. I'm not going to build, I could, but I'm not going to build an exit signal. We could in Bloodhound, because the trade management rules will make sure that we exit the trade when we want to, either with a loss or a profit. So the exit will be handled by Blackbird, actually, okay? So this is the input signal. And one more thing I wanted to show you, that if you have been with us for many, many years, that you know that there, in the old days, but even now, we have a function where you can choose to trade only long trades, only long signals, or only short signals. There could be times when a discretionary trader, experienced trader just knows better or just wants to restrict the direction of the next trade to either long or short. We have all seen that in certain market situations. And of course, we want to make that happen in our software, make it available in our software as well. So here's what we can do. A very simple inverter. And the inverter, with the inverter, I can restrict with a very simple long side enable. The long only mode is selected, and I can jump onto the short only mode as well. Okay, so if you want, this is a further enhancement, but for now, I'm just going to stay in auto, which means we're letting the software decide whether the next trade should be long or short or nothing. Okay, so we have now built the Bloodhound signal, and just as a standard practice, what I usually do here, that just to keep a track record, a version, a numbering scheme I follow, that I save this under a different name, just in case I want to come back to this tomorrow and I notice that, oh, I wish I had yesterday's files. All right, so always give a new version of a new stage in your development process. And now we can actually close Bloodhound. We have done the Bloodhound part, and you can leave Bloodhound on the chart, or you can just take it off the chart because we're going to use it in Blackbird also. So in this case, I'm just going to remove Bloodhound because I want to keep it simple. Okay, but remember, we have already built the file and we called it 1.1, and we're going to put it in Blackbird. You know how Blackbird works. We need a signal. In this case, that signal comes from this file. Actually, why don't I load the 1.1 file because we have a new version of it, remember? So now I have 1.1 and I have a logic called auto. All right, we have 3 here, but I'm going to use auto for the entry. And I'm not going to use exit because our Bloodhound file contains no exit strategy, no exit logic. Remember? Okay, otherwise I'm good to go. So this will be the signal. I'm just, if you know Blackbird, then I'm sorry, then I'm boring you, but just quickly, then I need to put on an order. It could be any amount, could be 100. I'm just going to trade one contract right now. And the rules is very simple. Look at this. I could start from scratch if you want. So order set, market entry. Let's say I want 2 ATR profit, just for a quick example. And let's say a 1.5 fixed. Well, that seems to be a bit too tight for me for what we want to do here. Let me just modify it to, let's say, how about 2.5? Okay, it's 2.5 ATR stop, 2 ATR profit. It's almost like a 1R trade, but if I really want to be precise, I can modify this to 2.5 target, and then we are mathematically doing a 1R trading strategy, which means that the target and the stop is the same distance from my entry. So whichever gets hit first, that's what the result will be. And the advantage of this strategy, by the way, is that as soon as I have 51% accuracy, theoretically, minus costs and expenses and commission, of course, but so do the math, but it's already a profitable strategy, right? Simply because more than half of my trades are winners. Okay, save and close. I'm not going to use any other settings like time restrictions and stuff, and I'm good to go. I need to reload the Ninja script, and let's say, well, 50 minutes. So I'm a few minutes late, so forgive me for that, but by and large, we're still in time, and I hope we have 10 minutes for questions. And this is it. We have the strategy. We have the strategy. You can switch it on. It will take trades in the future. Now, of course, the final question is, does this make sense? Well, you do have to do your own research. So there's no guarantee in trading simply because we're dealing with the future. And the usual disclaimer applies that everybody knows by heart. But look at this. Net profit. So we are definitely profitable over a profit factor 123. Now that's stellar. Do your own testing, do your own research, read the literature. This is actually not bad. Okay, and let's see the equity curve because we don't want to be underwater too much. Well, okay, there was a period here, last 180 days. This is how difficult trading is. You see, so first, I don't know, 2 months was rather flat. And unless you build, there is a playlist on our YouTube channel, let me mention, building confidence with numbers. Very important. Because if you don't have confidence in your strategy after 2 months, you may lose hope because you think this strategy is going nowhere. But it is going somewhere. It's just that the market conditions were not favorable. We need market conditions for this, for any strategy to shine. And whatever the strategy you might be deploying on the market, there will always be flat periods and there will be drawdowns. So I'm actually quite happy that the picture is not totally rosy because I can show you that, as we all know, intuitively or from practice, that this is not an easy job. Okay, but this is what it looks like. And again, I think it's the NQ 15-minute, 180 trades. Let me just see how many trades. Okay, 299 trades. Well, it's not 10,000 trades, but it's still So you could go back more in time to get more sample data, but 300 trades is okay. It's not like 5 or 7 trades. This is a big enough number to make it worthwhile to spend a weekend or a week or a certain amount of time to dig in a little deeper and research this, or just visit our website. So we've done what I promised to do. We built a system in 60 minutes or less, which has a verifiable edge.